Today, we're diving into a fascinating hypothetical. What happens when a massive geopolitical shock, like a crisis in Venezuela, slams into the crypto markets? We're going to explore what this scenario tells us about how much digital assets have matured, and really, what it all means for you when global politics and crypto crash into each other.
So right off the bat, you're probably thinking, what does Venezuela have to do with Bitcoin's price? I mean, it seems like a pretty random connection, doesn't it? How can a political drama in one country make a global asset like Bitcoin move so dramatically? Well, to figure that out, we have to follow the chain of events, starting with the one big thing that kicked it all off.
All right, so to really get the market's wild reaction, we first have to understand the catalyst. You know, that single dramatic event that got the ball rolling. Okay, just picture this headline popping up on your phone. A U.S. operation has resulted in the detention of Venezuela's sitting president, Nicolás Maduro. Now, news like this, it doesn't stay local. It instantly sends shockwaves across the entire global financial system. It hits oil prices, it hits stocks, and most importantly for our story, it hits crypto.
Now, you'd probably expect an event this chaotic to spark fear, right? A big market downturn. But what happened was the exact opposite. The crypto market didn't just ignore it, it rallied hard.
And, it really rallied. After weeks of just kind of trading sideways, Bitcoin suddenly just exploded. It blasted past that huge psychological level of $92,000. This wasn't some tiny little bump. It was a major breakout that, let me tell you, caught a lot of traders totally off guard.
And it wasn't just a Bitcoin story. Nope, Ether got in on the action too, clearing the $3,100 mark with ease. And that right there confirmed this wasn't some isolated fluke. It was a powerful market-wide reaction. So the big question is, what on earth was driving this rally?
Well, it turns out the rally was fueled by this perfect storm of stories and theories all hitting the market at once. First, the event made oil prices drop. Traders saw that and immediately thought disinflation, which is a great sign for hard assets like Bitcoin. Then, at the same time, these unverified rumors started flying around that Venezuela was sitting on a massive Bitcoin reserve. The theory was, hey, if the US seizes it, they'll just hold on to it, not dump it on the market. And to top it all off, the derivatives market was already primed for a big move up, which basically just added rocket fuel to the fire.
But here's where it gets really interesting. Beyond just the price charts, a whole other story was playing out in the prediction markets. This is where traders were putting real money down, betting on who would actually be leading Venezuela next.
So this table shows us exactly where the money was going. On two of the biggest platforms, Polymarket and Kalshi, one name shot to the top pretty quickly. Delcy Rodríguez, a longtime politician, was given about a 45% chance of taking over. Trailing her were some of the key opposition figures. And as for the captured leader, Maduro, well, his odds just cratered down to single digits.
So yeah, this chart shows a clear frontrunner, but the real story is in the details. See, if you add up the odds for the two main opposition candidates, their chances are almost the same as the leaders. What does that tell us? It tells us the market was far from certain about how this would all shake out. The opposition was split, but together, they were still a major force to be reckoned with.
So here's the bottom line on this part. While the market had a favorite, it was absolutely not a done deal. What these numbers really show is that traders were wrestling with some huge, unanswered questions about Venezuela's future. The market wasn't pricing in a sure thing. It was pricing in deep, deep uncertainty.
Okay, so we've seen the price surge and we've looked at the political odds. But to get the real story, we have to go deeper. We need to look past the headlines and dive into the on-chain data. Because that's what shows us what the long-term investors were actually doing when all this chaos was going down.
And to do that, we have to talk about one key metric, exchange net flow. It's actually really simple. When you see a lot of Bitcoin moving onto exchanges, it usually means people are getting ready to sell. When you see it moving off of exchanges, it suggests they're in it for the long haul. They're holding. This one metric cuts through all the noise.
And what's so fascinating is, this isn't a new thing. Researchers at XWin looked at this exact metric across a whole bunch of other geopolitical shocks: Russia's invasion of Ukraine, the conflict in Sudan, wars in the Middle East, and guess what? In every single case, the pattern was the same. Prices might bounce around like crazy in the short term, but there was no sustained panic selling from the long-term holders. The net flows stayed pretty stable.
And that brings us right back to our Venezuela scenario, because the on-chain data shows the exact same pattern. Sure, people were being cautious, but there was no mass flood of Bitcoin onto exchanges. Panic selling was just not happening. The market was watching, but it wasn't running for the exits.
So, what does all this tell us when you put it together? Well, it points to a really fundamental shift in how the crypto market is handling these kinds of global shocks. It points to a kind of newfound resilience, a new maturity.
This quote from the XMWEN research report just nails it perfectly. The market has become more resilient, with initial reactions fading quickly. It reacts, absolutely, but that initial shock wears off fast because the underlying belief of the long-term holders is just staying strong.
And this points to a crucial new skill the market seems to have learned. It can tell the difference between headline risk, a localized event that causes some short-term drama, and true systemic risk, an event that threatens the entire global financial system. The crisis in Venezuela, as big as it was ultimately treated by investors as headline risk, not a systemic, sell-everything kind of threat.
And all of that leaves us with the big question. Was this just a one-off reaction, or are we actually seeing the new normal for a maturing crypto market? A market that can now absorb major geopolitical shocks without completely breaking its stride. That's the multi-trillion-dollar question we should all be watching.